Hello everybody, this is Sslj from mychartcoach.com, and in this video we're taking a look at the small caps. Yeah, this is the Russell 2000 chart right here. Yeah, if you look here, this is the Russell 2000 as well. You could see this is the futures. There was a big drop on Friday, so that was a major red flag. There is more pressure. I just made a video, and the indexes were a little more flat. They're down a little harder right now, down a little more right now. Signaling possible more downside risk tomorrow. You've got VIX trying to push a little bit higher. So keep an eye on the Russell 2000. So that's the small caps. Right now, there's a big red candle formed on Friday, and there was a close below the middle Bollinger Band, which is also the 20-day simple moving average, and below the 50-day simple moving average as well. And so both of those closes, breaking both of those support levels is a major red flag, and it does signal more downside risk. It's going to be real important that it bounces this week off of this support zone. Otherwise, it could get a new downtrend going. You can see here it had made multiple tops up here in this 169 to 170 zone, and then on Friday this key support level, the dotted purple line, there was a break below. You can see there was a lot of consolidation in the zone, and then that drop below the green line is a major red flag. The last time there was a close below the 50-day simple moving average was back here in April and May, and it quickly recovered. It hit that 100-day simple moving average and got a new uptrend going. If 165.62, if it's trading basically below at 165, starts dropping below 165, that's going to be a major red flag. You have the lower Bollinger Band at 164, and this support from the previous drop at 163. That's going to be the next two major support levels. If it dropped below this close from back here on the 27th of June, you could see a drop down to the 100-day simple moving average at 160. In order to get higher, it has to get back above the 50-day simple moving average, and then back above that middle Bollinger Band currently at 167.22. Okay, with the big drop for the Russell 2000, TZA, ticker symbol TZA. This is a small cap bear 3 times. It had a nice move on Friday, closed up over 5%, and so, geez Louise. So that was signaling, more upside potential here with this close above the 50-day simple moving average currently at 898. And so if TZA can stay above $9 next week, that's going to be really bullish. If it drops back below $9, that's going to signal that it was a false alarm on Friday. It's not ready to go. It needs to be above $9 for it to be a good play with this setup, in order to make a run up here to the high close resistance level, which was on the 27th here. And so that's going to be the next big level to break up here at 940. And so if we can get above 940, then you'd be looking for a run up there to $10. So at the 100-day simple moving average. So this is a bullish move here for TZA. You have the PSAR bull flip, the volume spike, MACD is heating up. And RSI now is at 54. Okay, so let's take a look at the small caps. All the stocks in this video are small caps. These are the penny stocks. Sslj was the big winner on Friday, closed up 126%. So congrats to everybody that traded this. It is now above the oversold level, the 30 oversold level on RSI, and above 20, the oversold level on Fasto. You can see here there was a crossover on ADX where the red line crossed the black line minus DI below ADX. That's a signal the bulls are heating up. There was a PSAR bull flip. The green dots are now below the candles. It stands for stop and reverse. There was a bounce. Looks like a bullish one white soldier reversal pattern formed, and there was a close above EMAs 4 and 8, and so that was a bullish close there. EMA 4, this pink line, had been resistance for many weeks, and so the close above does signal more upside potential. The big level to break it now is going to be EMA 13 at 157, and then the bottom of the gap. It's just above 180 here. That's always a tough level to break. You can see that was the high for Friday, and then it pulled back. Anytime you get a break above the bottom of the gap, if it pulls back below, that's a lock and gain signals for the traders. A lot of times you can get the high of day when you lock them in at the bottom of the gap level if it fails to stay above that level. Going forward, if it can break above this 180 resistance zone, the middle Bollinger Band at 223 will be the next target. If it dropped below EMA 4 at 108, that would be a sell signal. It needs to stay above that level to remain in play. Now to break break it down a little further, the 15-minute chart really shows what's going on. To me, if it doesn't get above the 300 simple moving average at 144, I would signal, that signals downside risk. Okay, so it has to break this blue line. That's the 300 simple moving average. It got above that level at 2:30 on Friday, but it dropped back below into the close. So above 144, the 300 simple moving average signals upside potential, and then it has to break 185. That was the high close on Friday. To the downside, if it breaks below the middle Bollinger Band at 130, that puts the 200 simple moving average at 121 on deck, and then below that you have the 50 and 100 simple moving averages down there in the dollar zone. So it's just all about breaking 144 on Monday. Okay, take a look at GST, another bounce play, closed up nearly 28%. It was up higher in the earlier in the day. This is sold off. It's still oversold on Fasto and RSI. This has got a very ugly chart going. There was a big gap right here, a gap down, and then another gap down. And then what happened on Friday, it bounced. It has the bullish one white soldier reversal pattern as well. That pattern forms when the open is above the previous close. Okay, so this is the close on Thursday. This is the open on Friday. And then the close is above the previous day's open. And so that signaled, that formed the bullish one white soldier reversal pattern. It's the exact same pattern as Sslj. Very similar charts here. It ran up to the bottom of the gap, and it got above temporarily. Right, this is the gap, gap number 1, gap number 2, and it failed to stay above, and it pulled back. So if you locked in gains right there at this 17 to 18 level, you got high of day. And so once it broke above and then pulled back below, that was a signal, for the traders that it was a signal to lock in gains. Now it did close below EMA 4 at 14.7. Anytime you hold anything overnight that closes below EMA 4 on the daily chart, it is a risk to hold. It signals the bears are still in control. It's going to have to break that level to head higher. If it fails to get above the 15 resistance zone, it's going to signal more downside risk. Get above 15, then it's got to come up here, get above the bottom of the gap, and then fill that gap to make a run to EMA 8. If you look here at the 15-minute chart for GST, you can see it broke out here on Friday above the 50 simple moving average. It got above the 100 simple moving average, and then look, it ran up to the gap, the bottom of the gap right here. This is the gap, and it failed to stay above the bottom of the gap level, which was 18, and pulled back. And so that was your locking gain signal if you're a trader. And then it came back down, and then it bounced off of support. By doing that, you could have reloaded down here off the 12s, and then now that this 12 level is the stop loss level, if it drops below 12, that would be a sell signal. If you're trading off of the 15-minute chart, if it holds 12 and bounces off that level, it has to get above 15 and 18 to head higher. Below 12 would signal downside risk. It has to hold that level. Okay, so it is above the 50 simple moving average, but that close below the middle Bollinger Band, it was a red flag that did signal downside risk. Anytime you hold a penny stock that closes below the middle Bollinger Band on the 15-minute chart, you are taking on more risk. Okay, take a look at AWX. This has been insane. This thing is going nuts. It closed. It's cool to see this. It's great to see a stock on no. I haven't found any news. Now I may be wrong, but I've been checking all the major websites, and nobody's showing news, including NASDAQ and Yahoo Finance, Market Watch, any of the major Seeking Alpha, all those different websites. If you look up the recent news, the last thing I'm finding are the financials. The last time they reported. So back in March, and so they've been running this thing up. From my opinion, and no news. Now I didn't do major due diligence on this, and maybe there's something going on that's moving this thing that I don't know about, but it's not obvious to me. So to me, it seems like it's a pump and dump, But you never know how high they're going to run the pump and dump, and I'll show you exactly, what you should, one strategy of how you should play it. Okay, because I have kept saying that it's likely to start at this level, and then it broke out to the next one, and then I'm like, well, if it could stay above that and then keep going, then that's the next level to break. It's likely to stall out, but it keeps breaking through the levels that you would think it would stall out at, which is awesome. Right now it's at 1780 in after hours trading. On Friday it closed at $10.25. It ran another 70% in after hours trading. This is crazy. Look at this move here. So right now you've got 1, 2, 3 gaps, And so those 3 gap up opens has formed bearish 3 gap ups reversal pattern that formed on Friday, and so there is a bearish reversal pattern now. What that signals is the chart's getting frothy. Obviously it's gone super parabolic. It's pushing hard. Like when Bitcoin was hitting 20,000 and everybody was thinking it was going to keep pushing higher. That's kind of what this feels like right now on the chart. It's pushing super hard. Now obviously it's going for another gap up open on Monday because it's trading at 17. So now you're looking at 4 gaps in a row. Right? I mean, look at the trajectory. God, I did that last time. Look at the trajectory of these candles. Look how the candles are going in a straight perpendicular line here to the horizontal sideways action that it broke out from. I mean, this is unsustainable. Yes, they've pushed it up like crazy. Somebody is running this hardcore and everybody's behind it, which is cool. The ATM is open right now, but at some point, this is going to be a nasty, nasty, nasty crash. And so just don't get caught holding the bag. You know what I mean? So like when it breaks down, you got to go to the sidelines because the Fibonacci retrace on this thing is going to be really painful. The first support level is down here at EMA4 at 666. It's at 1780 right now. So just to work back into the Bollinger Bands, the upper Bollinger Bands at 674, you're looking at an $11 drop. And who knows how high they're going to push it to. This is an epic run. Congrats to everyone. And so, you can see the volume has been increasing on the way up. And so if you look at the 15-minute chart here for AWX, okay, notice how tight the Bollinger Bands were on the 23rd. Super tight. And then it broke out to the upside, and then volume came in on the 24th. And so basically, if you loaded on this day, on the 24th, and you just kept riding, everything was all good until this candle right here. And so there was never a sell signal on the 15-minute chart until you got to this candle right here. But what happened was it came down and it hit the 50 simple moving average, and it got back above the middle Bollinger Band into the close. And the close on Friday was a bit above the middle Bollinger Band. So there was not a sell signal on the 15-minute chart since the breakout happened. This close below, this is a signal that you can, it's all about the close, where it closes at. And so if it closes below the middle Bollinger Band, that signals downside downside risk. We got below that level and back above. It gave you a chance to make a trade here. But the bottom line is it's held this middle Bollinger Band the entire time during the run. And so when it closes below that, that's going to be your clue that, okay, yeah, this is broken down, and now that's a bearish change in trend. And once it gets below the 50 simple moving average, that's when the chart will really be broken down. Now that's way up, and now it's at 17, and so that's going to throw the chart way out of whack. There's going to be a huge unfilled gap. And so, the big support level is going to be down here at $9. All right, if you look at AWX on the weekly chart, you can see here it broke out above key resistance levels. When we were first on it, it broke above 2016 levels. I mean, first it was, it broke above down here, above this 250 zone, and then it got above this 300 week moving average was going to be the big one, and that was lined up with 2016 resistance. It got above that, and then it got above the 350 zone from back here in 2015, and then you had this whole zone from 2014, and it got above that, and then you had this zone, the high close from 2014, and then the high from 2012, and it busted through all of that on Friday. Right, and now it's at 17, and so this is a weekly chart. Each candle represents 1 week of trading. This goes back to 2011, and so now I trying to find resistance, I went to the monthly chart, and so you can see here this is a 20-year monthly chart. To me, it looks like the trading started here on the stock in 1999. And so if you go up here, it looks like it's never traded at these levels before. Now that's just my analysis that I have here going back 20 years. I mean, maybe it's traded before, but it looks to me like this is an all-time high for the stock. The first major support level is going to be right here at 1050. Okay, so this is the high close at 2007. That's the all-time monthly high close for AWX. All right, so so this is going to be yeah, we're gonna have. I guess yeah. I guess yeah. We do have more time this month. So if it closes above this 1050 level for the month, that would be the all-time high close. You know, if it pulls back, watch 1050 and see if that level holds. That should be, you know, that's where you want to see it stay above. Okay, let's look at Bspm. Closed up 35%. This was trading above the key levels and then it pulled back. So going forward on next week, Monday, it's got to get above the 100 and 200 day simple moving averages. And so when it gets above 263 there, the 100-day simple moving average, that would be bullish. And then it's got to get above this high close over here. And so that's 290. Those are the two levels to break above. You know, it's in this channel right here. It's back in the sideways channel. You know, it dropped below, it got back up, and it's back in the channel. You know, what has to happen is it has to get at the top of the channel right now is 290, and so it has to break above the 100 and 200 day simple moving average and above that 290 level to break out above the top of the channel. And then also, you know, you have the high close from July there, which is also a key level to break, which is lined up with that 100-day simple moving average at 263. The closing price on the 10th, and then the closing price back here on the 5th. Okay, so or the 4th. Okay, so let's look here at Crmd. Closed up 19%. Yeah, this was a nice move. It formed the black candle. Many times when that candle forms, a stock will pull back. There's still this unfilled gap down here. It's very small between high of day on the 24th and low of day on the 25th. So it dropped down to 30 cents, would fill the gap. Now it formed that black candle and it looked like it was going to come down there and possibly fill that gap, but it broke back above resistance. It was this 34 level and the high close here in June. That was the big level to get above as far as closes go. And you can see it had dropped back below right here on this black candle. And it looked like maybe it was going to stall out and come back, fill that gap before it came back up and tested resistance. But the next day, on Thursday of last week, it busted right through the 200 and 300-day simple moving averages. That was a really bullish close above both levels. And then on Friday, it followed through and broke out higher. Now, if you look at this descending resistance line from the December high close and February, you know, when I drew this descending resistance line, the closing price on Friday was right at that level. And so this 51 to 52 level is going to be a big level to break. If it can get above, then you're looking at 57 and then 63. You know, these two high closes that form this descending resistance line. This is the three big levels, 52, 57, 63. All right, if it pulls back, what you want to see is you want to see that blue line hold in at 40 cents. You want to see it stay above 40 cents. Okay, let's look at Gsat. Closed up 15%. Yeah, you've got RSI now at 58, Fasto at 89. Nice bullish crossover here on ADX. So this chart is really heating up. It had a close on Friday above the 50-day simple moving average. The last time it closed above that level was back there in April, and it failed to hold that level, and it pulled back, and the downtrend continued. So if it can stay above 50 cents, above the 50-day simple moving average, that would be bullish. And look for a run up to the 100-day simple moving average at 60. Now, if it dropped back below 50, that would signal more consolidation, and it has to stay above the middle Bollinger Band at 46. A drop below 46 would be a major red flag. It needs to hold more 46 and stay above 50 to get a new uptrend going. Okay, let's look at BDR here. Okay, closed up 14% on very light volume. Keep an eye on this one. You know, it's you know, it can get some runs going with some volume. It bounced off the bottom here of the recent pattern off this 50-day simple moving average at 119, and it's back above the middle Bollinger Band at 127. And so if it can stay above 127, look for a possible run up here to this 155 level. Okay, 155 and then 162 are the two key levels to break above. And so, yeah, so you know, you know, this 160 or 135 will be another key level as well. But just going forward, if it can stay above 127, it could possibly make a rally back up to those previous levels. If it dropped back below the middle Bollinger Band, that would signal it's not ready to go, and it would be a sell signal if it dropped back below that 50-day simple moving average. Let's take a look at AMDA. This chart is another thinly traded stock. It's trying to heat up. It has a really ugly chart going right now. You can see it's been in a major downtrend. It did close above EMA 4. If it can stay above 46, and get above 48, it could possibly run up here to this gap. There's a gap between high of day on this candle and low of day on this candle, and so you could possibly see a run up to that middle Bollinger Band at 62 if it could break out above 48. It would have to get above the EMA 13 at 54 to make a run to the 60s. So keep an eye on it. Volume's really light. It's a very ugly chart. Like I said, it's a nasty downtrend, but maybe it'll heat up this week. Look at PSAR here, the green dots. They've been above the candles this whole time, and now they're really close. When the share price hits the PSAR level, the dots would flip below the price, below the candles, and that would signal a possible change in trend. So if it hit 51, that would create a PSAR bull flip. Okay, take a look at SID here, closed up 8 and over 8% here. It's been on this nice run. It got above the middle Bollinger Band back here on the 9th and started a new uptrend. It got above the 50-day simple moving average last week on this candle, and then Friday it closed above the 100-day simple moving average, above the green and the gold lines. There is a gap between high of day on this candle and low of day on this candle. So if it did pull back down to that 50-day simple moving average at 216, it would fill this gap. Going forward, what you want to see is it hold that 236 level, the 100-day simple moving average, and then the next levels to break are going to be this high close resistance from back here in May at 260, 261, and then you've got the 100 or the 200 and 300-day simple moving averages. So this 255 to 260 level is going to be a really tough resistance level to break. If it goes up there and stalls out, that would be signaling a temporary top, locking gains. Possible pullback lower. Has to stay above that 100-day simple moving average to continue being a good play. So keep an eye on Cphi this week. Closed up 5%. This is one of the China plays. It did close above the 50-day simple moving average and the 300-day simple moving average in the middle Bollinger Band. This whole zone here, 24 to 25. You've got these three moving averages all converging, and then it hit the 200-day simple moving average. That's the red line there. You can see that it's been the tough one to break. If it can get above that level and above the 100-day simple moving average, the gold line at 28, it could possibly get moving. So yeah, keep an eye on Cphi for a move above 28. Above 28, and it gets interesting. Okay, so keep an eye on it. Take a look at Bioaq. This used to be a big board stock. It dropped down to the OTC. It's been a good trader. It's made some nice moves, like this big bullish run in June. It pulled back, it formed this ascending triangle pattern, and then it broke out above the top of the triangle, above horizontal resistance. And so, yeah, you can see this is horizontal resistance, and then this candle right here broke out above, and that signals more upside potential. And so now what we're looking for is a break above high close resistance, which is right up here. And so if it can break above this closing price on the 23rd, that's going to signal that it wants to keep pushing higher. Let's see, that looks like about 8.5 or so. It's hard to read on this chart, but the whole key is that it just keeps the uptrend going. That's what you want to see. Basically, right now, in my opinion, the middle Bollinger Band is the big level to hold. As long as it's staying above 6 cents, that's signaling more upside potential. If it were to drop below this ascending support line and below the middle Bollinger Band, that would be a signal that the chart is breaking down, and then that's where you could see it drop down to that 1500-day simple moving averages. And also what you want to see is stay above this horizontal resistance line. You want to see that level turn into support, and that's probably more about at about 6.4. So if it gets below 6.4, that's where it's getting to be a red flag, and then below 6 would be a clear sell signal. And then to the upside, what you're looking for is a run up, above that 8.5 level and up to 10 cents. Okay, so if you look at Bioaq, this is another daily chart for them, and so this is showing the gaps, and the gaps are the big resistance levels that's happening with this stock right now. Back in February, there's 3 gaps. There's 1 gap right here, 2 gap, 3 gap, or you could go 1, 2, 3 in reverse. And so right now we'll just make it easy and we'll say this is the first gap. It's hitting the first gap right here, and that's to 10 cents. And so basically it stalled out at the bottom of the gap resistance level. I mentioned that before about locking in gains at the bottom of the gap, and this was another example of that. You could have locked them in here, used the pullback to reload off of the bounce if you're a trader. Once it gets above that bottom of the gap level, a run to 10 cents would fill the gap, and then you'd be looking for a run up to this 15-cent level, which is the second gap level. And so once again, if it gets above 10, it runs up to that 14, 15 level, the bottom of the gap level, and it stalls out. That would be the next take profit zone. and then you pull, pulls back, you look to load, and then it breaks through, and then it has to fill that gap to head higher to get up to the 200-day simple moving average up here at 21. Okay, so take a look at Uoip. This is another over-the-counter stock. It made a big move on Friday. It's on a big run right now. It's very frothy. It's got lots of green candles, or green volume bars and white candles in a row. But look, check out this big run in April into May. So this has a history of making big multi-day runs. And so right now it looks like it's breaking out. The close above the closing price on May 21st is signaling more upside potential. If it can stay above 3 cents, that should signal it wants to head higher. If it dropped below 3, that would be a red flag. That would be a sell signal. Above 3 is signaling that it wants to keep pushing higher. If you look at it on the weekly chart, you can see it's breaking out on the weekly chart as well. Big move here. It's above the 150 and 220 week moving averages, above all 4 of these lines. That's very bullish. It's breaking out above high close resistance. Look how tight this channel was for the last couple of months. Breaking out above it is a clear signal that it wants to head higher. Right now, it needs to stay above the top of that channel, which is around 2.5. A drop below would signal more consolidation. You can see over here that the 300-day simple moving average is way up at $3. So yeah, or 300-week moving average. If you look here on the monthly chart, you can see here that it's breaking out above the green line, which is the 50-month moving average. And so there hasn't been a close above the 50-month moving average in years. I don't know if when's the last time it's closed above that level, or if it ever has. It's got a nice monthly chart uptrend going. It's above the middle Bollinger Band. It has an uptrend. If it stays above 0.26, that would be really bullish. You want to see it stay above 2.6 for the month, and then check out the 4 level. This was 4 was a big support level back here in 2014. Not on a lot of volume, but it was a support level. If it can stay above 4, then it could run up here into this. What is this? Probably I don't even know how high that is. 15 cents or so. Up to this red line right here. That would be the next resistance level. So there's a lot of upside potential if it can stay above 2.6. So keep an eye. I mean, look at some of the volume back here in the day. I mean, it had to have hundreds of millions of shares traded. Okay, so take a look at Orexq. This is another stock that used to be a big board play. Now it's on the over-the-counter. Very light volume, only 74,000 shares. It made it above the middle Bollinger Band. So keep an eye on it. Maybe volume. It has to have volume. But if you see volume come into this stock and it stays above 4 cents, maybe it'll heat up. Below 4 cents would be a sell signal. If it can stay above 4, you've got the 50-day simple moving average up here at 0.9. Okay, so look at DRUS here, Drone USA. Okay, so this made a nice move last week on Tuesday and Wednesday. Huge move. Came up here to this 20-cent level, or 2 cent. 0.2 and pulled back down, and the close on Friday was not bullish. It got back below the 50-day simple moving average and below the middle Bollinger Band, similar to this candle right here on the second trading day in July, where it was above the 50-day simple moving average, then it pulled back below. That signaled downside risk. Look how hard that pullback was. It was a very harsh pullback, and so you could see Pennyland tested, possibly 7.5, maybe even down here, if these 2 levels turn into resistance. So it's going to be really important this week that it gets back above the 50-day simple moving average at basically at 13 cents, 0.128. Has to get back above there in the middle Bollinger Band at 1.222. Okay, 1.22. If those levels turn into resistance, that's not going to be good for the bulls. All right, to the upside, if we can break above 15 here. That was the high close. That would be really bullish. You could see 20 retested, and then you have the 100-day simple moving average way up here at 3.8. So yeah, so we'll see. If Drone USA can get a reversal going. All right, everybody. Thanks for viewing this video. Please come check out the chat. I'll post the link below the video. Thank you.